Dear investor, in this session we will talk about the continuing reform process, some color on the result season, and ultimately our portfolios. Reforms have been continuing and have been received very well by the markets, in a large manner have contributed to the improving market sentiment in the past period. It started with corporate tax rate cuts that benefited consumers and financials in a big manner, with lower tax rates, the benefit of which we are seeing in the current result season. In certain sections of the market where entities would be able to retain the benefit, the gains could prove to be structural. Financials, where money is raw material, there, just because of increased ROEs, the time span between two fundraisers on the equity side would increase, and that's a fundamental change to the overall business and could lead to higher sustained valuations in that space. This set of reforms itself changed market sentiment. While domestics who were continued buyers, we saw FIIs which had been large sellers after the budget to change direction and have become large buyers currently. This has been followed up by promises of more reforms on individual taxation also, and there is a rethink as per media sources on the whole package of long-term and short-term capital gains and dividend distribution tax, and is further contributing to improvement in sentiment. Besides, government has also changed the manner of disinvesting public sector companies versus selling small bits in the public markets. After a long while, the government is looking to sell profitable and strategic PSUs to private sector or offshore corporates. BPCL, BHEL, Concor have all been lined up, and in some cases government may choose to get out completely, and in some cases they may retain a part stake. This is clearly again helping to draw global attention towards India. This is a big event, and it is helping reduce the pressure on the listed space and would go a long way in attracting FDI into the country. At the same time, PSUs, which we see as the cheapest part in the market, would again get a leg up, and valuations would be significantly better in an event of a strategic sale versus sale in the domestic market. So this again is something which is improving sentiment to a big extent in the marketplace. Coming down to results, the result season was expected to be soft, given that we saw a print of just 5% on the economy in the first quarter. However, the result season, while it has been soft in patches, has gone quite well for our set of companies, which were mostly concentrated in the consumers and small ticket financiers. The tax benefits clearly helped, and the profit increases in most cases has been way sharper versus the profit before tax increases. Some of our companies did get impacted, not so much by the economic slowdown, but maybe more because of the restructuring that they themselves were undergoing. Cement export and businesses in the chemical intermediary spaces that our portfolios have been exposed to have all delivered very strong numbers. We continue to stay hopeful as the result season unfolds over the next 15 days. Uh, we do believe that further reforms in the taxation space, which could result in further reduction in taxes, be it dividend distribution tax or capital gains tax, would help attract investments into the country, both FIIs and FDI, would provide a fillip to the economy by putting more money into the hands of the consumer. And we do believe that the policy direction clearly helps our portfolio positioning, which is in a large manner concentrated towards the consumers, smaller tickets, and retail-oriented financial businesses. While we do have some exposure to the theme through the cement businesses. Thank you.